Hey, More to Life crew. I'm going to do this really quick kind of conversation live. I'm going to wing it a little bit because I've had some technical challenges lately, but it's been a while since you and I talked. So I just want to ask, are you ready? You know, I've been saying for months now that we should be putting money aside every month or every paycheck so that we can get ready to invest in the stock market. And honestly, it's almost time to buy. If you've been putting money aside, then you are ready. But today I want to talk about how we're going to make those life-changing gains. Now, for those of you that are brand new and have never been here before, I'm on a journey to rebuilding my retirement fund. I had been completely exhausted, and so this journey is about learning and growing and sharing information completely free. So if you're interested in rebuilding that and taking full advantage of the upcoming market crash, then please do subscribe and consider joining us. So my journey has been about DIY investing and rebuilding my retirement fund. I started about 8 months ago, kind of dipping my toe into the stock market, and I decided to create this channel just so that I could help my friends come along for the ride and help them. We could all rebuild our wealth together. So I'm not going to lie, it's been a huge learning curve, and there have been some mistakes along the way. But right now, what I want to tell you is it's the most exciting time to invest. There couldn't be a better time to prepare yourself to invest in the stock market. And the reason that is because that imminent market crash that people have been talking about for almost 3 years now, it's almost here. If you look at inflation soaring, countries have been printing money like crazy. The banks are about to start raising interest rates. The Bank of Canada is expected to do that as of next week. Jerome Powell of the Fed in the US is now coming out of a meeting as I'm recording this video. And so, and we've already seen some minor stock market crashes that have rebounded. So yesterday we saw another huge red day. I mean, it has not been a great year for the stock market this year. The NASDAQ dropped dramatically, almost like 5%, and then it rebounded by the end of the day back into positive territory. Now, this only happens in rare occasions. And usually when it happens, it's an indication that the stock market is going to continue to tank for at least 5 to 10%. And when a stock market drops 5 to 10% over the next couple of months, it really means that even blue chip stocks can fall 20 to 25%. And if you're in tech stocks could fall 40 to 50%. And if you're in growth stocks that are kind of new or burgeoning markets or burgeoning industries, they could fall 60 to 70%. Now, I don't know about you, but I'm a shopaholic. I love retail therapy, and when things like COVID or whatever get too crazy, I have to go and buy something. So I have learned to curb my shopaholic nature and turn it towards the stock market. Now, I was talking to one of our members here on the channel, Chantal, the other day, and the way I explained stock market crashes was this. Sometimes when the market is really, really bullish for a really long time, you have mini corrections, right? And we've seen those. They're seasonal. They could coincide with quarterly earnings or whatever, or little quakes in the, economy. But you can think of these as seasonal sales in terms of retail or shopping, right? And then, of course, at least once a year, you have these huge sales, and usually they coincide with annual earnings reports. Okay, so like these huge sales, you can kind of think, hold on one second, you can kind of think of those as like a huge Boxing Day sale or a Black Friday sale or a Monday sale, you know what I'm saying? And basically, when you see these sales, you and I can pick things up for like 40 to 50% off, which is really, really awesome. But obviously you don't want to just buy anything, right? You don't go shopping just to buy something that's 70% off unless you really love it and you know it's going to last, right? So But the bottom line is, when there is a market correction, there are some great bargains to be had. Now, the only thing is, sometimes there's like a liquidation sale, right? And that's going to give you 50 to 60 to 70% off. And again, you want to pick your stocks very carefully, just like as if you were going shopping. So let me just tell you some of my mistakes. About 8 months ago, I started dipping my toe into the stock market, and I didn't have a strategy. I didn't invest too much, but I was mostly watching and learning and watching my stocks go up and down. And my biggest mistake along the way in the beginning was letting my excitement get to me, letting my emotions get to me. When a stock started to go up, I suddenly wanted to buy in, and of course it continued to go up, and so I was really happy about the gains. But eventually I realized that I had bought that stock already in a bull market, already at a very high price. So I soon learned not to let my emotions get the buying decision for me. I learned how to make a plan and, identify sort of a reasonable price for a stock. And then I ended up, in the end, because I was dipping my toe kind of here and there, with a whole bunch of stocks in a whole bunch of different places, literally over diversified, and my portfolio became really difficult to manage. So mistake number 2 was really not having an exit strategy when I bought a stock in the first place. And so 2 or 3 months ago, I was looking at my portfolio, and I did a video talking about how I'm going to take some losses and how I'm going to rearrange things. And I was up over 10, 12, 13% on any given day, which I thought was really great after like 6 months of investing. But then I realized that that really wasn't great, because as we had these mini corrections, I was losing and I was going into negative territory. So I was starting to get scared. I'm not going to lie to you, Now, I consider myself a long-term investor. So what I did was I started splitting my investment into half growth stocks that are my long-term holds that I know are going to do well in the next 5 to 10 years. And the other half of my investments went into high-yield dividend stocks that are providing me a monthly income, a passive income. And so in the last few weeks, I watched those gains of 10, 12, 15% go down into negative territory, and it really made me scared. So I decided, it was time to come up with a different strategy. And I didn't really shift my strategy too much, but it is significant. So that's what I want to talk about here. So first I sat down and I calculated what percentage of my stocks had dropped during previous crashes. So I looked into like 2008, 2020, mostly March 2020, because there was a huge stock market correction as soon as people realized we were in a COVID circumstance. And then I looked at each single one and I checked which companies were carrying a lot of debt, how fast they were growing, what their profits were over the last few years, how solid they were, in other words, and whether analysts said the stock was overvalued compared to their earnings. And I decided which ones were my top 10 keepers. I had 5 in long-term growth and 5 in passive investment income. And I decided that I would sell off, if I could, without losing too much money, sell off the ones that I really didn't care that much about anymore at a sale price. And even if I took a little bit of a loss, that was okay. But the problem was that some of the ones that I had bought way early, I had bought way too high. So yesterday I watched a couple of those stocks hit like 50 and 60%. And I was like, I'm never offloading these. These are going to tank even further over the next couple of months. I realized I didn't really have a lot of cash to invest in the stocks that I really liked and buy them at a super discount. So I decided to have a defensive strategy, right? So I had these small positions where I only had a few stocks or a few shares, and I didn't really care if I lost 25 to 30% because I needed that cash to buy into my favorite stocks at a 50% or 60% discount. So I started setting what's called stop limits. Now, for those of you who don't know, a stop limit basically says if the price tanks to this price, I sell. And I might take a loss, but I don't care because I'm not going to let it go any further. Or you set a stop limit to keep a certain percentage of your profits in the event of a stock market crash or a correction. And that way you can take some profit out and then buy back later. So I want to say that I had never really considered stop limits before because I'm a long-term investor. I consider myself a long-term investor, and most of long-term investors really believe that you just hold on to good stocks. And if you can buy more of that stock when the stock price drops, then you can sort of dollar cost average in and bring your average price of that stock down. So for long-term investors, you'll hear them say, oh, it's not timing. You can't time the market. It's about time in the market. And so I never really tried to time the market. My big aha moment was that rule about not being able to time the market is actually a really great general rule, and it is true. Except when you know that there's a stock market crash that's imminent and you know what's about to happen. So if you think about it, if you bought a stock at 20% over value, which I actually did several times, and you expect it to crash below 40, 50%, why wouldn't you take that 10 to 25% loss and then buy it back at a discount? So let me give you an example. If I bought a stock at $100 and I sold it at 75, when I buy it back at 50, I've saved that 25% that I'd lost in the first place. And then when it hits $100 again, I'm actually up $25, right? So now you shouldn't do this all the time. Obviously, you need to be really selective, and you need to sort of watch the stock and sort of be able to predict some of its behavior. But there are 3 other reasons to consider doing this. And a lot of people don't invest in the stock market because they think it's too risky, right? They're afraid to lose money. And that fear makes us make different decisions or not play at all. So what I love about this strategy is if I have identified stocks that I know that are going to be a great discount and that eventually are going to rebound, then I can now pick my strategy a little bit more carefully. So hold on one sec. Okay, so here are the 3 reasons that I would do this. Number 1, it allows me some peace of mind in playing it safe a little bit because I don't want to see my stock portfolio go down to like 40, 50%, right? And so it feels like I'm playing it safe a little bit in terms of stocks that I know are going to have some kind of correction. And it also allows me, number 2, to offload some stocks that I no longer want. This way I can consolidate them, take my investments and move them into my top 10, rejig things a little bit, fix my positions if I have too large a position, and move stuff into my higher conviction stocks that I know I'm going to hold on to for 10 to 15 years. It also allows me, number 3, it allows me to keep a good amount of cash aside so that I can take full advantage of the stock market correction or crash or the fire sale, in other words, right? Or that Boxing Day sale or the Black Friday sale or whatever. So yesterday, as I watched that red right there, based on the highs and lows of the prices that I had already predetermined and was taking into consideration for my buying patterns, I set a whole bunch of stop limits. Now, stop limits, if you don't understand how that works, it's basically you set a stop price where if the market is going down or your stock is going down, that's the lowest price that you're willing to sell to take profit. So I set a few stop limits, and my plan was to take some profit in some of the stocks that I had done fairly well in, and then that I knew were going to go down in the next month or two, and lower my average price. And the second thing I wanted to do was to sell off some of my smaller holdings that I didn't see making money in the next 3 years. And these, I decided, you know what, I'm willing to take a loss. The reason I was willing to take a loss was because it was a small portion of my portfolio, and I could set limit buys for the other stocks that I really wanted to buy into and that I knew were going to grow over the next 5 to 10 years. So that allowed me to keep my cash, about 10 to 20% of my cash, on the side so that I could watch the stock market and watch how it goes down and when the correction hits, so that I would actually have money to take full advantage of it. Now, the day before yesterday, I have to tell you, I was feeling sick to my stomach. When my portfolio went from plus 12% to like negative 2, 3, 4, and I was looking at individual stocks at like 30% drop. That was like, oh man, a kick in the guts, right? And I felt sick that I hadn't sold my stock sooner. Of course, I was never going to be able to time the market, but I felt bad about it, right? Now that I have this new strategy, which is actually not new, it's like, a strategy that all people who play the stock market use. But now that I've wrapped my head around it, I want to say, at the end of the day, I feel much, much better. Like at the end of yesterday, once I had a plan and I knew I was in control and I knew what my entry and exit points were, I had no more fear of losing money. I was super excited. Now I'm watching the stocks and I'm like waiting for them to hit my price and seeing how low they'll actually go. And I felt super excited about being able to buy back in at a bargain price, right? It's like getting that like Black Friday sale that you've been looking at something for so long and you just want to buy it, and then suddenly you get to actually buy it. So anyway, all that to say that I feel smarter, stronger than I've ever felt before. And now I've learned a super valuable lesson about how not to panic and how to play defensively a little bit. When you have to, if you play hockey or you play sports, there's times in the game where, it's going back and forth and you got to play a little defensively, especially if you have a little bit of a lead, right? So this is just my way of playing defensively. My message to you, my More to Life crew, is if you're too afraid to go in, go ahead, keep your money aside, wait till it crashes. The signals are there. So now when my friends say, oh, you're playing in the stock market, oh, isn't that risky? And aren't you afraid to lose money? I mean, I can't afford to lose my retirement fund, right? My answer is absolutely not. I literally have no fear anymore because I have a plan. I know that I'm executing that plan. I know what my entry and exit points are, and I'm patient. It's all about patience, right? So I literally have no fear anymore about investing my changes and my small change in the stock market. And what I do still have a fear of, by the way, is the alternative, right? Because when you think about it, what's the alternative to investing in the stock market, especially when you can have life-changing gains at a time when the market's about to crash? The alternative really is just keeping your money in the bank, as inflation actually devalues your money and then the interest rates go up and you're losing money on your borrowing. And then on top of all that, you're giving a percentage to the bank. If you're putting it in mutual funds or any kind of investments with the bank, they're taking their fees and they're also taking fees on your savings. So you're actually experiencing negative growth. I mean, I'm more afraid of keeping my money so-called safe in the bank and experiencing negative growth than I am about putting it in the stock market smartly and not too risky, but seeing potentially exponential growth. So anyway, that's my big aha. At least I know when the market dips, I have a plan, and And, sometimes in the stock market, you'll have temporary negative growth, but eventually you always end up recovering it. And that's what they mean by time in the market, right? So for me, this is a 5 to 10 to 15 year timeline, and I hope it is for you too. If you haven't already joined us at the More to Life crew, come find us on our Facebook page or click the subscribe button on YouTube, and let's all get more to life together.